G'day guys, Willard here from Kofkin Bond & Co, just with another market update for the month of July. As you know, there's a bit of nip in the air and winter is well and truly set in. Australia deals with the COVID outbreaks across several states, but July also marks the start of a new financial year, a good time to reflect on how we have come since last year and to make plans for the year ahead. Investors everywhere are wishing for a farewell to the best financial year on the Australian market in almost 3.5 decades. The All Ordinaries index put on 26.2% over the last 12 months, a growth rate not seen since 1987, while the benchmark, the ASX 200, chalked up the biggest year to date with gains of 24%. As the financial year ended, there was plenty of celebration on the economic front despite the continuing impact of COVID-19. Australia rebounded out of recession with an economic growth of 1.8% in March, the third consecutive quarterly rise. Interest rates remain at historic lows at 0.1%. Inflation sits at just 1.1%, well below the Reserve Bank's target of 2 to 3%. Despite the fears that global economic recovery will lead to higher inflation and interest rates, the Reserve Bank has indicated rates will not rise until 2024 and annual growth rates of around 3%. It's currently at 1.5%, with the major banks actually predicting that it will be in 2023. In positive news, unemployment continues to fall from 5.5% to 5.1% in May. Retail trade rose 0.1% in May and up 77.4% for the year. As consumer confidence grows, the ANZ Roy Morgan Consumer Confidence Index lifted almost a point in June to 112.2 points. Australia's trade surplus increased to 5.8 billion in March to 8 billion in April, and the 40th consecutive month on the back of strong Chinese demand for our iron ore and other commodities. Iron ore prices rose 6.7% in June and almost 36% in 2021 to date. Oil prices have surged, the Brent crude up 8.4% in June and 45% for the year. That's good for producers and energy stocks, but not so good for business reliant on fuel and consumers at the petrol bowser. The Australian dollar finished the year at US 75 US cents, and that's up from 69 US cents from a year ago. So it's a 3-year high of just under US 80 cents in February due to the US dollar strength. Now the COVID news. There's been 3 billion doses in 180 countries with average rate of 43.2 million a day. Darwin follows Perth into a lockdown, half of Australia population now in a lockdown. Barnaby Joyce was fined for not wearing a mask, jobbed him in his electorate, pretty funny. Daily infections in India fell to the lowest since March. UK reported the most cases since January, and that was fueled by the Delta variant first identified in India. Some other global headlines. China marks 100 years in the Communist Party. President Xi Jinping said the Communist Party needed heroes to carry into the second century. 29 medals were awarded to the people with a variety of backgrounds. There was 20.1 million vehicles registered in Australia in 2021, 23,000 being electric vehicles, up 62%. Toyota topped the list of passenger vehicles for the 16th consecutive year with 3 million registrations, mostly Hiace utes. Diddy, the competition to Uber, has listed on the New York Stock Exchange, with getting them another fuel injection of about $4 billion in cash and giving them a valuation of about $69 billion. US house prices are also on the rise, fastest in 30 years. Kofkin bond model portfolio has seen a gain of about 2.07%, which with great returns coming from the US big tech companies, Apple up 9.9% and Microsoft up 8.5%, and some pain felt on Tencent being down 7.2%. Coming to the end of the quarter, the return for the last 3 months
in the Kofkin Bonds modelled growth portfolio is 4.9, and year to date we've done 8.12. This has been a great outcome for our clients, hoping to continue this quiet bull run that we are in. Thank you for tuning in, and best wishes to all Australians that are dealing with lockdowns.